Do you believe that having a perfect credit score is a prerequisite for buying a home? If so, you're not alone. Now, let's take a moment to dispel this common myth. While it's true that having a solid credit score can be advantageous when it comes to buying a home, it's not the only factor that lenders consider. Far from it, in fact. Imagine credit score as one piece of a much larger puzzle. It's an important piece, sure, but it doesn't make up the whole picture. Lenders are looking at your financial situation from multiple angles. They're interested in your income, your employment history, your debt-to-income ratio. Yes, your credit score is part of this, but it's by no means the only piece they're considering. Let's put it this way. Your credit score is like your report card from high school. It matters, but it's not the only thing that colleges look at when they're deciding whether to admit you. They also consider your extracurricular activities, your leadership roles, your essays. The same principle applies here. A good credit score can certainly help you secure a better interest rate on your mortgage. It's a tangible representation of your financial reliability, your history of paying your debts on time. But it's not the golden ticket to home ownership that many people believe it to be. And let's not forget, there's no such thing as a perfect credit score. The highest possible score is 850, but you don't need to hit that magic number to be considered a good credit risk. A score of 700 or above is generally considered good, and a score of 750 or above is considered excellent. So if your score isn't quite where you'd like it to be, don't panic. It's not the end of the world, and it's certainly not the end of your home buying journey. Take steps to improve it by all means, but don't let it deter you from your dream of home ownership. So, while a good credit score can be beneficial, it's not the be-all and end-all of home buying. How many times have you heard that you must have a 20% down payment to buy a home? This is another common myth that needs debunking. First off, let's clarify. It's true that a 20% down payment can eliminate the need for private mortgage insurance, also known as PMI. This insurance is typically required by lenders when the down payment is less than 20% of the home's purchase price. It's a safety net for the lender, not you, in case you default on your loan. So yes, if you can afford it, a 20% down payment is a good idea. But what if you can't afford it? Does that mean home ownership is out of reach? Absolutely not. Many lenders offer mortgages with down payments as low as 3%. That's right, just 3%. Suddenly that dream home might seem a lot more attainable. Now you might be thinking, but what about PMI? Yes, you will have to pay for PMI if your down payment is less than 20%. However, keep in mind that PMI is not permanent. Once you've built up 20% equity in your home, you can request to have the PMI removed. There are also numerous loan programs available specifically for first-time home buyers and those with lower incomes. For instance, the Federal Housing Administration, or FHA, offers loans with down payments as low as 3.5%. And then there's the Department of Veterans Affairs, or VA, which offers loans with zero down payment for qualifying veterans. Moreover, there are also local and state programs as well as non-profit organizations that offer down payment assistance. These programs are designed to help make home ownership more accessible, and many of them offer low interest rates and flexible repayment terms. So when you hear that 20% down payment tale again, remember, it's not a hard and fast rule. It's just one of many options. Don't let the fear of a large down payment deter you from exploring the possibilities. So, don't let the 20% down payment myth stop you from pursuing home ownership. Have you ever been told that buying a home is always a better financial decision than renting? Well, it's not always the case. Let's delve into it. There are scenarios where renting might actually be the smarter choice. For instance, if you foresee a move within the next few years due to job relocation or personal reasons, renting might be a more practical option. Why? Because the costs associated with buying and selling a home, think real estate agent commissions, closing costs, moving expenses, can add up and make home ownership less economical if you're not planning to stay put for a while. Another consideration is the cost of owning a home in your chosen area. If the cost of home ownership significantly exceeds the cost of renting, it might be wiser to rent and invest the difference. Remember, buying a home is not just about the mortgage payment. You also need to factor in additional costs like property taxes, homeowners insurance, and regular maintenance, all of which can add up. As a renter, these are costs that you don't have to worry about, as they are usually covered by the landlord. And let's not forget the financial flexibility that renting offers. If you're in a stage of life where you're still figuring out your career path, or if you value the freedom to pick up and move without the burden of selling a home, renting can provide that flexibility. Now, this isn't to say that home ownership is a bad decision, far from it. Owning a home can provide a sense of stability, build equity over time, and offer tax advantages. But it's important to understand that home ownership is not a one-size-fits-all solution. It's a major financial commitment, and the benefits and drawbacks need to be weighed carefully. Remember, home ownership is a big decision, and it's not always the best option for everyone. It's about finding what works best for you, given your financial situation, your lifestyle, and your long-term goals. So don't rush into home ownership because you've heard it's always the better choice. Take your time, do your research, and make the decision that's right for you. Many people believe that real estate is always a safe investment because it always appreciates. This is a myth. Let's dive into the reality of real estate investments, shall we? Firstly, let us discuss the impact of economic downturns. The value of your property is not immune to the wider economy. In times of economic recession, property values can and often do drop. In fact, during the global financial crisis of 2008, housing prices in the United States fell by an average of 30%. So, while real estate can be a good investment, it's not immune to the ups and downs of the economy. Now, let's consider the changes in the neighborhood. The area surrounding your property plays a crucial role in its value. If a once thriving shopping district nearby shuts down, or if a new landfill is opened up the road, your property value can take a hit. Conversely, if a new school or shopping mall is built nearby, your property value could rise. The point is, neighborhood dynamics can significantly influence the value of your property, and these dynamics are often out of your control. Natural disasters, too, are a factor to consider. These unpredictable events can cause significant damage to properties and can drastically affect their value. Whether it's a flood, a wildfire, or an earthquake, the impact of such disasters can take years to recover from, and in some cases, the property value may never fully bounce back. So, while it's true that real estate can be a good long-term investment, it's not a golden ticket. It's subject to various factors that can lead to fluctuations in property values. It's crucial to do your research, be aware of the risks, and make informed decisions. So while real estate can be a good investment, it's not a surefire way to wealth. Remember, every investment comes with its own set of risks and rewards, and real estate is no exception. We've debunked some common home buying myths today, but there are many more out there. Let's quickly revisit the truths we've uncovered. A perfect credit score isn't the be-all and end-all. Lenders consider many factors, and there are numerous paths to home ownership. That intimidating 20% down payment? It's not a hard and fast rule. There are various loan programs that require much less. The notion that owning trumps renting every time, well, it's not always black and white. Each has its own pros and cons, depending on your personal circumstances and market conditions, and the belief that real estate always appreciates. It's a risky assumption to bank on. Remember, it's essential to do your own research and consult with professionals before making a decision. Your unique situation will guide you to the best choice. Thank you for joining us today as we debunked some common home buying myths. If you found this video helpful, please like, share, and subscribe for more informative content.